Are you looking to take your personal finances to the next level? Well, you're in the right place. Welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not, with your host, Joseph Sangle.
Well, welcome to the Monday Money Tip Podcast. I hope everybody's having a great Monday. My name is Joseph Sangle, and this podcast is brought to you by I Was Broke, Now I'm Not, as always, and we are fired up to bring you episode number
141.
Yes, it's the middle of March. Can you believe it?
It flew by.
Yes. And it's March 15th of 2021, and it's right about the time that the world shut down a year ago.
That's crazy to think about.
Isn't that amazing? A year. We survived. So many people have had, severe illness and death, and it's been a challenge. And I'll have to tell you about that time that a year ago today, we were all like, what in the world? Literally, the entire world is going on. And it's nice to feel a little bit, dare I say it, normal.
I always wonder if it would have been better if we would have known it would have been a year, or if it's better that we didn't know.
It's better to not know. It's just better not to know, I think. Oh, I mean, I thrive on the unknowns. So, that one was a scary unknown.
It was.
For health, number one and first and foremost, and then for livelihoods, for businesses, for the people that we serve. And we really hope that if you look back over what we did, during the podcast, we kept bringing this podcast every single Monday.
Yep.
And that's what we try to do, is bring right now relevant stuff. We definitely threw away the script of what we're going to talk about. We, believe it or not, everybody, we plan out week by week. And when we start the year, we've got all 52 weeks pretty much planned. We kind of threw that out the window.
Got to.
And had a special COVID feature every single week. And now we're going to talk with something that a lot of people face. It's right now relevant, but it's also something a lot of people face when they're trying to become debt-free. Tell everybody what we're going to talk about this week.
Yes. So we're talking about selling a car with negative equity. So our question is, I'm really wanting to get out of debt, but my biggest problem is my truck. I owe way more on the truck than I can sell it for. I owe $32,000, but it's worth maybe $25,000. Any suggestions?
Yes.
A little predicament.
Yes, we're going to help with that. And it's a common situation. And if you're listening to the podcast and you're like, hey, this doesn't apply directly to me. I've already achieved rung 4 of the ladder. I've already become debt-free, except for my house. Well, I will tell you this. You probably have a friend or a coworker that you're going to talk to today who has this exact scenario. So that's why we really wanted to take time for an episode of the podcast to answer this question and to be able to help anybody who has negative equity. So we're going to say how to sell a car with negative equity. It applies to a truck, a boat, a house. I mean, anything where you owe more on it than you can currently sell it for. This episode is going to be directly relevant to that.
Yeah.
So first, though, we're going to talk about current events. My favorite section of the podcast. Let's go.
Now it's time to get caught up with our current money events.
The Monday Money Tip Podcast is sponsored by the Fully Funded Life Membership Program. The Fully Funded Life Membership Program provides all you need to begin winning with money and live a fully funded life. Fully Funded Life includes 4 key components: courses, challenges, coaching, and community. Courses provide financial education. Challenges help you make massive progress in a specific money skill. Coaching is provided by the Fully Funded Life Certified Coaches through open office hours held multiple times each month. All of the courses, challenges, and coaching results in an outstanding community that help equip, motivate, and encourage you to take your next financial steps toward your fully funded life. Fully Funded Life. Courses, challenges, coaching, community. All that's missing is you. Learn more and receive a special offer for Monday Money Tip listeners today at fullyfunded.life/MMT. That's www.fullyfunded.life/MMT. All right, for today's current money events section, which is awesome. And I nailed that. That was amazing. I sang that. I still don't understand why I've not been invited to lead worship at churches or, be the entertainment for the weekend at church, the corner restaurant with the band.
They just haven't heard your potential yet.
I've been invited one time to the 3 a.m.
The 3 a.m.
worship service. It's really amazing. But today I'm going to talk about an interest rates update. I haven't done that for a while.
It has been a while. It's had some major changes.
It has had major changes. Maybe that's why I haven't updated on it, because it's so sad.
It's depressing.
From the last update, it hasn't changed. for savings accounts, the average interest rates are right at, now gather yourself, 0.50%.
Wah, wah.
That means you're getting 50 cents per $100 per year. So when they pay it quarterly, well, then that's like 12 cents. When they pay it monthly, it's like 4 cents per $100.
Yeah.
Just as a newsflash, you used to be able to make $3 to $4 to $5. In the mid 80s, you could make $14 per $100.
Wow.
Is that crazy?
That's crazy.
That's crazy. What banks are offering such outstanding rates? Marcus, Ally, Citibank, American Express. We'll have a link in the show notes to our favorite banks. If you're with your big bank, I've got bad news for you. They're not paying you any interest. If they pay any interest, they're paying you 1 penny per $100. Not 50 pennies, 1 penny.
What are you going to do with all that money?
I'm telling you right now, it's a bad day to be a saver and a saver only.
Yeah.
Right?
Wow.
Now listen, you need savings. And the goal of savings, as we've said many times, and as our sponsor of this section, Fully Funded Life, will tell you, savings is primarily there for safekeeping, not for growth. But we really would like it to keep pace with inflation. That would be good. Now, CD interest rates, a certificate of deposit, they're a little higher, and that's because you're locking up your money, which gives confidence to the bank that they could lend it out to others for a while. So a 12-month CD is averaging at 0.60%. A 5-year or 60-month CD is 0.9 to 1.1%. It's kind of in line with the 10-year Treasury rate, which has been increasing rapidly as we record this podcast. It's very interesting to watch that. Now, mortgage interest rates, they've been very low. However, they are increasing. As we record this podcast, the 15-year rate is 2.39%. The 30-year rate is still under 3%, which is really ridiculous.
Yeah, it is.
2.94%. I would say this, if you have not refinanced your house and you can get better interest rates, if one of these 2.39% or 2.94% sounds better, you need to get in line right away. Mm-hmm. I really do believe interest rates are going to be increasing. My daughter bought her first house. Is that unbelievable?
Growing up so fast.
She's growing up so fast. Mm-hmm. And let me tell you, you're grown up. You're just grown up. You're not growing anymore when you buy a house. And, I did co-sign for her house. And maybe we should do a special episode on should you co-sign. Mm-hmm. But I found her to be trustworthy as it relates to money. Maybe not on totally cleaning her room necessary, but definitely financially. And so we co-signed on this loan. She's paying it. Let's be very clear.
Yeah.
She's paying it. But she got a 30-year rate, 2.875.
Wow.
That is, I couldn't believe it. And so it certainly makes it very affordable. So that is the update for today's current money event section, and that is savings, CD, and mortgage interest rates. If you find a way to save money on yours, you should do that, and then share your success story with us. We want to celebrate with you. So that's it for today's current money events section.
Yeah, that's kind of a different ending down there.
I did a different intonation. Did you like that?
Yeah, it's kind of different. You should try a different one every week and see which one sticks.
I'm going to rap one week, but people need to write it for me.
I'm a little bit nervous about
Get fired
that.
up.
All right. Our success story this week comes from Jim. And he is a member of one of our churches that we visited, True North Church.
I'm actually, believe it or not, holding a Yeti cup that they gave me for their college, True North College. And that's totally unplanned. I like that.
Looks like you've used it.
I have used it. It's got coffee stains on it, which is the way. And it's been in the field with me. So this is field
really
tested.
lived life.
It's field tested.
Field tested. All right. And he wrote in to share all that has changed from their family since attending the FLE, so our financial learning experience, our live or online event that we have at his church. He said, in 2 years, credit card debt is gone, and my credit score is raised over 100 points. Our mortgage is down to $60,000, and we also saved over $10,000. He also shares that now when the bills arrive, they're able to pay them right away instead of having to put them aside and wait.
That's incredible.
Yeah.
Well, let's talk about number one. Great job, Jim. And this is in New Jersey. And, property taxes are higher in New Jersey than a lot of areas, but it is gorgeous. It's called the Garden State for a reason. And it's really interesting. In 2 years, all the credit card is gone. And we talk about this all the time, that you can be debt-free except for the house in 1 to 3 years, 12 to 36 months. So that happened. Their credit score raised 100 points. That's one of those things that we know happens when people pay off debt. But it's like the side benefit because, why do you need a great credit score? A lot of times it's to borrow more money. Mm-hmm. But now it allows them to borrow at better rates for their house, for larger debts, for things that build value, build equity. And then their mortgage has been paid way down and they put money in savings. They've changed their life is what they've done. And they're on their way to quickly achieving rung number 7. I fully expect Jim and his family to write us a note about becoming debt-free, including the house, within a couple years.
Yeah.
Unbelievable.
Well, you can really hear that it's like they've changed the way that they deal with money. So they changed how they handle money. They've changed how, the discipline in it, they've really had an impact change where it's not, we paid off some debt and now we're going to go get some more, but it's we paid off all of this and that's our new way going forward.
Yeah. And I would just to build on that, they've changed their life. You're listening to the podcast. We have well over 1,000 people listen to the podcast every single week. I would just say of the 1,000, if statistics are right, 70% of them are living paycheck to paycheck. If it's a common general population. And so I know that when you listen to this podcast, you're wondering, especially if you've been on your debt freedom journey a while, can this really happen for you? And I would just say, yes. And keep listening to the podcast. Go back and listen to how to pay off debt more swiftly. Listen to the podcast about, paying off, using your budget more effectively, how to maximize a bonus, how to maximize a tax refund. As you listen to these podcast episodes, our hope is that it's right now relevant with helpful stuff, like we're going to talk about paying off a car with negative equity today, and be encouraged. So you're being equipped by that, but be encouraged from the success stories. Mm-hmm. That's what it's all about.
Yep.
It fires me up a lot.
All right. So our question for today is, I'm really wanting to get out of debt. My biggest problem is my truck. I owe way more on my truck than I can sell it for. I owe $32,000, but it's worth maybe $25,000. Any suggestions?
Of course I have suggestions. We all have suggestions. Megan will have suggestions. But first, I'd like to say congratulations on making the actual decision to get out of debt. Because around here on the podcast, we would identify you as a person who's attempting to accomplish rung number 4, which is to eliminate all non-house, non-business debt. Things like credit cards, vehicles, student loans, furniture loans, credit cards, all those things. Before we work on getting rid of the truck and its debt that's related to it, let's take a quick run through the rungs before it, because I don't want to skip them, rungs 1 through 3. This is important because if you don't have rungs number 1 through 3 in place, your debt freedom journey will be filled with a lot of avoidable, and that's a key word, avoidable challenges. So remind everybody, Megan, what rung number 1 is.
Yes, rung number 1 is set goals.
And so explain why that's important.
Yeah, so ultimately we want you to know why you're doing this. So what is your drive to becoming financially free? What is the why behind it for you? Everyone is different. So you set your why and then you set goals that help you stay on that. So they help you sustain your climb up the ladder. So it's easy to fall off of it, but your whys, you continue to go back to those as to this is why I'm doing this. This is the goals that I've set before me about why I want to achieve financial freedom. Why do I want to sell this car that has negative equity so I can do X, Y, and Z?
And because our cars, we're emotional about them. Mm-hmm. Something tells me this truck is not just a truck. It's the truck. The why is your fuel. It's the fuel that helps you power through making the decisions necessary to get rid of the debt, even if it means getting rid of the truck.
Yeah.
That's a little news flash of what we're going to talk about. So you're certainly going to face challenges as you do this, as you pay off this vehicle, and you want to remember your why. And if you don't have that written down, you've got to do that.
Yep.
And then, of course, rung 2 is what?
Rung number 2 is save money. So we want to start with 1 month of expenses. So this margin is likely to help you as you seek to dump the truck with negative equity.
Yeah, not have a dump truck, but to dump the truck with negative equity.
Yep.
And then rung number 3 is to invest enough to capture the full company match or $100 a month, whichever is greater. Or if you don't have a company retirement plan. And this is going to ensure that your long-term dreams are going to be funded as you pursue this short-term objective. And we really do believe paying off a vehicle is short-term, becoming debt-free. So with all that said, let's breathe. Let's focus on ways you can dump the truck, not a dump truck, but it may be a dump truck. He didn't say. Maybe. It'd be a cheap dump truck with negative equity. So first, you need to answer a big question, which is what?
Yes. So the first question you need to answer is, do you need a replacement vehicle?
Okay. So for those listening to the podcast, you may be able to go down a vehicle. And it's not fun to go from 2 vehicles if you're a couple to 1. But I know a lot of people have done that for a while.
Just requires some
planning. Have you ever done that? Have you ever went down to 1 vehicle?
We haven't, but I know a lot of people around me have, like a lot of friends, or like our neighbor did it for a while. And it just honestly requires planning of, you need to be at work at this time. I need to be here at this time. I need to go to the grocery store.
It communicates seriousness, doesn't it?
Yeah.
Like when we're meeting with somebody and they said, we've going down to 1 vehicle.
Yeah.
It says we're serious about this. Now, I've went down to 1 vehicle involuntarily, like when my vehicle breaks down, right? And that seems like no fun.
Right.
However, it is a big deal for eliminating costs because it opens up the options for you. However, we did find out the answer to this questioner, and what was the answer? Did they need a replacement vehicle?
Yes. So he said, yes, I need a replacement vehicle.
Why is it a he?
I don't
You know,
quite
it's a he.
know.
I don't put the name on this.
I know.
She thinks it's a he. I like it.
Okay. So I
know some girls who drive some trucks.
I think because Jordan wants a truck really bad. I just think about that.
The college student that's living with us, before I could get her a car, I helped her find a car and all this stuff. She drove my truck, and she was so sad to give back my 1997 GMC truck.
But the person says, yes, I need a replacement vehicle, and I think I can find one for around $10,000.
Okay. So $10,000. So they owe 32. They think they can sell it for 25. So $7,000 negative equity. They think they can find one for $10K. All right. So we got the numbers out there. And so the first thing that you could do is to do what?
Yep. So number 1 is sell the truck and finance the payoff and replacement vehicle.
Yes. So think about that. That's 3 things. You're going to sell the truck, so find a buyer for 25, finance the $7,000 payoff, and the $10,000 for the replacement vehicle. So let's walk through that again. The negative equity is $7,000. The replacement vehicle is $10,000. With this move, you lower your debt obligation by $15,000.
That's a big deal.
You went from $32,000 to $17,000. So the benefits of this move is you lower your debt by 47%, almost half.
It's a big deal.
It's a big move.
Yeah.
The drawback of this move, of course, is what?
Is a $10,000 vehicle and not a $25,000.
Yeah,
vehicle.
and usually $10,000 trucks are not the same as a $25,000 truck. It's usually several years older, may not have the Bluetooth feature, may still accept cassette tapes. Although I think you can get a CD player easily for $10,000 these days. My truck has a cassette player, Alan, cassette player alone. And it works sometimes as I listen to my old Carmen cassette tapes get fired up. Somebody knows what I'm talking about. I'm sure of it, but it's like somebody.
My first car, which I had all the way, like the last 2 years of high school, all through college, and then until like Jordan and I got married. So up until like five years ago, which is wild, but it didn't have any power. So no power locks, no power windows. So
excellent.
That's how it got cheaper.
So you had the hand crank.
You got the hand crank, yep.
There you go. So that's one thing you do. You could sell the truck and add the negative equity to the next vehicle. A lot of buy here, pay here car lots do that. And banks are certainly familiar with negative equity.
Oh, yeah.
And car dealers are used to that. Okay, so the second way to do it is what?
Yep. So the second way, you could sell the truck and use the cash from the payoff, finance the replacement vehicle.
Yeah, okay, so just to be clear, it's 3 more decisions. Sell the truck, use cash that you have for the payoff, and finance the replacement vehicle. I do encourage those of you listening, you could watch this again on YouTube, and we explain this stuff with some of this in word and print and letters and numbers. Helps you understand it more than just hearing it. But so your negative equity is $7,000. How fast can you get your hands on $7,000? Or if you're selling your thing with negative equity, whatever the negative equity is, a tax refund, a bonus, stimulus money, which they seem to hand out on the quarter right now.
Some more.
Sell something, overtime, extra job, side work. So 3 of them are like finding money: tax refund, bonus, sell something, economic stimulus payment. The second one is, hey, you're going to go work for it.
Yeah.
Side job, overtime,
and
extra job.
And with those things, they don't sound very fun to a lot of people I know. And so they're like, I don't really want to do that. But it's not forever. You're just working for a goal. So for this, it's the $7,000 that you're trying to work. So it's not forever. It's just for now.
Yeah.
Good thing to remember.
So finding that $7,000, man, some people can do that in 4 months, 3 months. And with this move, by selling the truck and using your cash for the payoff, well, you lower your debt obligation by $22,000. From $32,000 to $10,000. And of course, the benefits of this move is you lower your debt not by 47%, by 69%. Now, of course, the drawback of this move is your replacement vehicle is a $10,000 vehicle and not a $25,000 vehicle, and you burnt up $7,000 of savings.
That's true.
So there's 2 drawbacks there. But it's a way to get there. Again, you're driving a $10,000 vehicle, which a lot of people love that. There's some people driving down the road right now that says that sounds like an upgrade.
They got some duct tape around.
Like, hey, I've got a 1997 GMC. I'm not sure what it's worth, but it's worth something. It stopped losing money at some point in time. As long as it starts and rolls down the road, it kind of stops. If you have a truck that works reliably, it's worth at least $1,000.
There's
so
a couple
eventually it
parts
loses
in there
money.
they can use.
But a $10,000 truck sounds like a major upgrade for me. Okay, so that is part number 3. It's a thing you could do. Okay, and what could they do?
Yep. So number 3 is you could keep the truck.
Yeah, just keep it. But instead of paying it off as scheduled for the next 5 years that you have remaining, pay it off in 3 years and drive it for 8 more years. That's 11 years total.
Yep.
The benefits of this move, of course, is that you know the history of this vehicle. You know it's reliable. You know that you treat it nice. You do, don't you? You get maintenance on it on a regular basis. Because I'm telling you right now, I can't say with confidence or with a straight face that I treat my truck kindly. It's gotten an oil change once every 5 years, whether it needs it or not, kind of. Is that terrible or what?
But your other car, your CRV, you get
I treat it very nice.
Yeah.
But my truck, I want it to die. I want to replace it, but it just won't die. But I do check the oil and I make sure it gets an oil change every 5 years.
Yeah.
And it has somewhat new tires on it, and I use it almost daily. I just drive it around and drive just a mile or 2. Okay, the drawback of this move, of course, is that you still have the same amount of debt, and you really didn't gain any time toward debt freedom other than just using the debt snowball, paying off credit cards, and using that other money to pay it off faster. Does that make sense? So there's really 3 options. There is sell the truck and roll the negative equity to the next vehicle, but it's a cheaper vehicle, so you lower your debt by half. Or sell the truck, use effort to get cash in hand to pay off that negative equity and finance the replacement vehicle. And the third thing is you could keep the truck. And in that same thing, you could work really hard, keeping the truck, pay off the $7,000 equity really fast so that you could drive a truck with no negative equity. So one of those 3 options applies to you, I'm sure of it. Anything else you would like to add with that?
Yeah, I think for every person, it's going to be different. So somebody might look at option 1 and say, well, that's the option that I want to go through. Or someone might look at option 3 and say, that's going to be the option that's going to fit our family. So I think it's really whatever the item is, whether it's a car, truck, boat, whatever, looking at that item and really playing out these 3 scenarios, or a 4th scenario if you can think of one, but the 3 scenarios and really figuring out what the best thing is for your family, what makes the most sense with the amount of negative equity you have versus how much it is, versus what the next thing you need to buy is.
100%.
So, yeah.
So this is just something that I felt like we should have an episode on. It was a great question. Lots of people have this issue. The question is, what works right for you? What sounds right? I know that when you hear it, it's going to sound right to you. And so with that, let's tell everybody what our quote is of the day.
Yeah. We also have an ebook that I'll link that goes through all of the
selling a car with negative equity.
Yep.
Great.
So I'll link that too. But our quote is from Earl Wilson.
Random person who said this, and I like it.
If you think nobody cares if you're alive, try missing a couple of car payments.
That's funny.
It is funny.
So if you don't think you matter, try missing a couple of car payments. I think it's kind of funny and humorous and, true. So the next episode is going to be awesome. It's actually going to be another success story.
Yep.
So many people recall the time that I interviewed my nephew as they paid off their house at age 33.
That was a crazy episode.
This is another amazing success story. And so we're going to be joined by my friends Gary and Karen Harper. And so we did this via Zoom, and it was fantastic to catch up with them and really share the story of their successes. I don't think you want to miss this episode. This is going to be one that's going to be uplifting, encouraging. He's been a wildly successful athlete, but he also, he really credits what has happened in their marriage to be his greatest success as a result of them getting their finances in order. Any married couple, you should listen to this one. And I think everybody will be inspired by the love they have for each other. So if you hope to be married someday, I think you will love it because of just seeing how much they adore each other. Yeah. I think it's awesome. And so if you like today's episode, what should they do?
Yes. If you like today's episode, please help us get the podcast to others who could benefit. So you can do that by leaving us a rating or review. You can comment, you can share it.
Yeah.
We would love for you to do all of the above.
And if you're on YouTube, you can click the subscribe button and ring the bell. You'll be notified every time there's a new video that's released.
Yep.
And you can leave a comment. If you hate what we just said, if you like it, regardless of what it is, if you have a success story with selling your vehicle with negative equity or something else with negative equity, please share it in the comments. It'd be very encouraging to everybody. It helps our podcast and YouTube channel get noticed by others who could benefit. So thanks so much. Happy Monday, everybody.
Thanks so much for listening to this episode of the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. If you enjoyed today's episode, please leave a review and subscribe. And for more great content and to stay up to date, visit iwbnin.com. We'll catch you next time.